This conference will now be recorded.
Sorry, what was that, Professor Boyd? Chelsea and who?
Kristen did not remind me.
To record, you barely started.
Okay. So in these first two adjusting entries, prepaid expenses and unearned revenue, there is a preceding entry that involves cash. Then the adjusting entry comes later. And we'll probably start off with the accruals today. In the accrual situation, we've recorded some revenue, but we get it later. Or we got an expense to pay, we pay it later. So see the difference, deferrals. Cash has already been involved in an adjusting entry. In accruals, cash is involved later. Okay, so here's chart of accounts. An adjusting entry always involves an account on the left and an account on the right. Okay, it involves an account on the left and an account on the right. Got it? So you can't have an adjusting entry and have two items over here or two over here. Now, if we were dealing with a prepaid expense, which is that type 1, notice the adjusting entry is going to be involving these accounts here. So see how I've done this? And I've said that the adjusting entry involves these accounts. So I've already put on this chart, if it's an adjusting entry 1, it's going to involve supplies, prepaid insurance, or auto, equipment, accumulated depreciation. So all the AJE 1s, that first type of adjusting entry, are here. And then on the other side, the AJE 1s are going to involve either depreciation expense, insurance expense, supplies expense. I'll try to remember to put this in course content, but you can do it yourself. So when we have the first type of adjusting entry, prepaid expenses, I'm already telling you what accounts are involved. Okay. Now, if we have unearned revenue, then that's a type 2. That's going to involve the unearned revenue account and sales. Okay, so I'm letting you know, okay, if it's an AJE 2, then it's unearned revenue and sales. When we get to AJE type 3, which is accrued revenue, this is something that we have indirectly worked with already. So the accounts involved are going to be a receivable, AJE 3, and revenue. So revenue can be involved in an AJE 2, or it can be involved in an AJE 3. Okay, so I'm showing you where the accounts are. And if you have an AJE 4, which is accrued expenses, then I'm showing you that for AJE 4, it's going to involve accrued liabilities. So salaries payable, are other accrued liabilities. Salaries payable is the big one, but if you have other types, taxes, anything else, it goes here. And then I'm showing you the expenses involved: interest expense, office salary expense, sales salary expense. So what this chart does is it maps the types of adjusting interest to the actual accounts that will be in the journal entries. So that's what this lays out. Okay. Today, let's begin by looking at accrued revenue. So this is an AGE type 3. And let's look at an example if we can get up here. Accrued revenue occurs when services have been performed or goods delivered, but cash has not been received. Prior to the adjusting entry, assets are understated and revenues is understated. Therefore, an adjusting entry to accrued revenue will result in a debit to the asset account, account receivable and others, and a credit to the revenue account. And so, we can have the passive time, such as interest, or delivery of goods, such as goods and services. A subsequent entry occurs when the cash is collected and cash is debited. So the adjusting entry occurs first, then a subsequent entry involves cash. So let's look at an example. Assume your landscaper performs services at a fee of $375 a week, but bills you monthly. So the landscaper sends his workers out and he charges $375 a week. You got a big yard, you got shrubbery and all of that. Then at the end of the month, the landscaper is going to make the entry, which is an adjusting entry, debit account receivable, credit, sales. Have y'all seen that entry before?
Yes.
So with this adjusting entry, this is a type 15. And sometimes it can involve interest or other types of things, but it's a type 15 where we debit the receivable and credit sales. And when the cash comes in, what is it? Type 3, debit cash, credit account receivable. So this is kind of an adjusting entry. When we first make the entry, we debit receivable and credit sales. Then when the cash comes in, we debit cash and credit account receivable. So we have already been doing this adjusting entry, correct?
Yes.
So you should know how to do it. Let's look at the next adjusting entry. And this involves accrued expenses. How many people in here work? How many people work? Most of y'all don't work.
I do.
I work. I work too.
Y'all work. So suppose you pay weekly, okay? You're getting the payroll every week. December 27th comes around and you pay, okay? And so you're making $2,500 a week, so you're doing well. Then we get to the end of the year, December 31st, and you still work, are they going to pay you on December 31st?
No.
They're
No,
going to wait.
sir.
They're going to wait to the end of the next week, which is in the next year. If I don't think I have a calendar. Oh, here's a calendar. So on the 6th, you got 2,500. On the 13th, you got 2,500. On the 20th, you got 2,500. On the 27th, you got 2,500. But when you work on December 30th and 31st, they're going to pay you when? Probably on January 3rd of the next year. Okay? But these 2 days of expenses, we got to record because revenue would have been earned related to these. And so if you work, the company is going to debit these expenses and credit salaries payable. So let's look at it again. You're making $500 a day, $2,500 a week. When the last day, 27th, come in, that's your last full check in the year. Then when those 2 days end, since the company has to close its books, it makes this AJE. It debits salary expense and credit wages payable for 1,000. So this says on December 31st, the company has incurred $1,000 in expenses, and it owes $1,000 in wages. And so it's going to make this AJE debiting salary expense and crediting wages payable. Now, when you are paid in January, you get $2,500 again on that Friday. But $1,000 is going to be debited to wages payable based on the fact that those expenses were recognized in the prior year. Then the salary expenses on those 3 days, $1,500. So only Wednesday, Thursday, Friday is expenses for the next year, 2018. But for 2017, you've already recognized this expense with the adjusting entry in that year. So all companies in the world are going to make this adjusting entry because they can take this expense and reduce their income, which is going to reduce what? The taxes they owe. So that's the accrued wages payable. It could be interest where, items accrued over a period of time. But in the AJE, we debit salary expense and credit wages payable. Then when we make the payment the next year, we're going to debit wages payable, debit salary expense, and credit cash. We are not going to have cash in the AJE, but in a subsequent entry, we'll have cash. Okay?
Okay.
All right.
So time to work some examples now. But once again, reviewing. Accrued revenue, that's a type 15. You debit the asset, account receivable, credit revenues. Then the subsequent entry is a type 3 when you get the cash. But that's after the AJE. Accrued expenses, the same thing happens. When you incur the expense, you debit the expense and credit a liability. The cash is paid later. And we said if you had an AJE 3, which involves accrued revenue, then you're going to have account receivable or some other interest receivable is going to be debited, and sales are going to be credited. So these are the accounts that are involved in a type 3 adjusting entry. If it's a type 4, you're going to be debiting salaries payable or other accrued liabilities. You know, salaries is the big one, but it could be any accrued liabilities, interest payable, whatever. And you're going to be, so you credit in these accounts and you're debiting office salaries, you're debiting sales salaries, or whatever. Okay. Okay, let's see if we can find some problems to work. Let's see if I can. Let's look at 26. And in 26, JSJ Run Car in December provided 5 limousines to Chase Bank for executives at a rate of $400 per vehicle for a special holiday outing. So at this big outing, and the execs are picked up in limousines. So they had 5 limousines, pick up the 5 execs and take them. So your JSJ rental car is happy. They provided 5 limousines to Chase Bank at $400 each. So what entry are they going to make?
Wouldn't it be type 15?
Yep. So since it's a type 15, see if I can find some journal entries here. I'll just copy these, copy. So we're talking about a type 3 now. So we'll take this information out. Okay, so we have 5 limousines, $400 per vehicle. And so at the end of the year, we want to make that adjusting entry. So what's that adjusting entry going to be? What you going to debit?
On receipt revenue? Oh, no, account, no, yeah.
Account receivable,
We're going
20,000, oh, 2,000.
Then would it be sales?
Yeah, then it will be sales that's credited. 2,000.
So that's the adjusting entry. So it's a type 15, but you've already been doing it. So that's an AJE type 3. What happens when they get the cash the next period? So they get the cash January 15th. What's your entry going to be?
Wouldn't it be like a seating entry?
Cash. I thought it was cash and account receivable.
Debit cash
No, that is right.
and credit account receivable. I thought y'all had seen this before.
That's what okay.
Oh no,
So-
I have. I was just reading the wrong thing. I was looking at the wrong thing.
Okay, so the same thing we've been doing. You do the work. You provide the limousines. You know, unearned corporate income. Remember that? This is a type of unearned corporate income. Debit receivables, credit sales, and we get the cash. We're going to debit cash and credit account receivable. This is the adjusting entry. Asset account, balance sheet account, income statement account. That's AJE. Then this is the subsequent entry here where we get the cash. See if y'all can do 27. So take a minute and do 27. Are we finished?
Yes.
So all we're gonna do is copy these, put them down here somewhere. Then we're gonna change the amounts. So what's the account receipt? What's the amount gonna be?
$4,000.
4,000. And what's gonna happen here when we get the cash?
Wouldn't you be the same numbers? 4,000.
So that is virtually all that's involved in a type 3 adjusting entry. You've seen it before. You should be able to handle it. And there are some other ones involving notes and everything, but we'll try to keep it simple. Okay, so here is our calendar with the 27th on a Friday. Here we're on January with January 3rd.
Professor Boyd,
Yes, ma'am.
would we always like get a calendar and like we always have to put in the dates?
Yeah. I guess you would have to, wouldn't you?
I was just trying to make sure that when we like do tests or anything of the sort, it's gonna look very similar to this, where we have to put in dates and actually have a look at a calendar, since calendars do change.
Yeah, so you look at the calendar. Yeah, the calendar is there.
I just had to make sure, Professor Boyd.
J.J. Ron Company pays its employees $5,000 a week for a 5-day workday. So they're getting $5,000 a week. So pay the payroll on December 27th. Make the adjusting entry for December 31st. And then make the subsequent payment of salaries on January 3rd. Can you all handle it?
Let me try.
So on the 6th, they got 5,000. On the 13th, they got 5,000. On the 20th, they got 5,000. On the 27th, they got 5,000. Make this journal entry. Then they didn't get it for these 2 days. Make the adjusting entry. Then we got into January and we paid full salary on the 3rd. Make that journal entry. So that's what you're being asked to do with this information. So I've been a nice guy. Got the accounts up here for you. I might not have them on a quiz, Chelsea.
Wait, what?
Oh man. So J. Ron Carter pays its employees $5,000 for a work week, $5,000 a day for a 5-day week. So on December 27th, what's going to be here?
5,000. 5,000.
Now they're working those 2 days, Monday and Tuesday, and we got to show that expense in 2017. So here's the AJE. So regular entry, AJE. What's going to be in this AJE?
Wouldn't it also be 5,000?
So if you running your company, you're going to pay $5,000 on the 27th, Christian. Then when December 31st comes around, you're going to pay $5,000 again. You're a nice guy. I'm going to work for you. I'm going to work for you. I like your holiday spirit. Pay them again the full amount on the 31st.
You know, some people do that in other countries. It's just not America.
Oh, it's not. So how much would they pay them in America? Okay, we know that they're getting 1,000 a day, right? So they're gonna say, okay, we're gonna accrue $1,000 because, excuse me, $2,000.
Oh, okay.
But when we get ready to pay them in January, 5,000, we've already accrued 2,000 and recognized the expense in that year. So we debit salaries payable for 2,000. That salaries payable in here twice for some reason. Wait a minute, I'm up too high. And we're gonna debit salary expense for 3,000. So normally we paying 5,000, but when we get to the end of the year, we have to accrue what's owed. The workers are owed 2,000, we accrue it. Then we get to December 31st, January 3rd, the next regular pay period. We debit the accrued expense, the payable on it. Then the expenses for the new year is only 3,000. The other 2,000 have already been recognized in the prior year, and we credit cash for 5,000. So we credit cash for 5,000 each time, but it's just how we work with the adjusting entry. Any questions?
No, sir.
All right, well, let's try another one then. JHJ Rental Car Company pays its employees bi-weekly $5,000 for a 10-day week. And they make their last payroll on December 27th. Then they got those same 2 days in the next year. So now we're paying them $5,000 every 10 days. So they got a check on the 13th for 5,000. They get a check on the 27th for 5,000. So now we got to put these entries in here, but it's a bi-weekly payroll now. So undo that. I'm gonna put those back in. Wait a minute, insert. Okay, let me move these over some if I can. I didn't put my row where I wanted it. That's okay. Okay, so here what I have, the numbers when we were paying weekly. So when we were paying them weekly, this is what I have. Trying to move it over some, but it does not. Let's move this up now. So now I want those numbers if it's bi-weekly. So that way you have a comparison. So if the numbers are bi-weekly, what's it going to look like? How would these numbers change, if at all, if we were paying bi-weekly rather than weekly? Most of y'all get paid bi-weekly.
Yeah, I do.
Okay.
I get every month.
Every month. Woo! But y'all running the company now.
Yep.
So you
Pretty
paying
rough.
back. So when December 27 rolls around, you gotta pay $5,000, okay? Does that make sense?
Yes.
Yes.
Now when we get ready to accrue for the 2 days, how much are we going to accrue? Here they were getting what, 1,000 a day. But now if it's bi-weekly on a 10-day period, they're getting what? 500 a day.
Times about 1,000, yeah.
500 a day, so it's
500, yeah.
$1,000. Because they're getting 500 a day, you know, based on the scenario, because it's bi-weekly, same 5,000, but it's bi-weekly. Then when we pay, they still want $5,000. But the salaries payable now is only going to be 1,000, and the salary expense will be 4,000. Any questions? So we make the adjustment for the salary. Okay, debit salary expense and credit cash each time. Then here's the AJE involving salary expense and wages payable. Then here's the subsequent entry where we involves cash, but that AJE did not involve cash. Any questions? Well, good, y'all got that down. We should be about ready for a quiz then, since Chelsea wanted a quiz today.
No, you're not gonna be lying on me. Not on me.
Then some people contact you and want on a quiz.
No. I said some people were wondering if we had one. And I said I didn't think we did. And no quiz. No, thank you.
Oh, we'll wait till Tuesday. What did I tell you? Which ones did I give y'all to work on? Did I give y'all 7 and 8, Christian?
Sure.
Didn't I give you all something to work on?
No, yes, I think you
No.
did.
You didn't.
Like, you mean today or last class?
Today.
Oh, no.
All right, well, let's go back to 7 and 8. So do 7. Can y'all do 7? Can you do 7? Y'all forgot about last class period? Y'all were trying to count the months.
I remember that.
So at number 7, we have a 12-month policy for $1,200 bought on April 1st. So from April to December, we said was 9 months. The insurance is $1,200, so the insurance rate is $100 a month. So see if we can come in here. So when we bought the insurance, we debited cash. We debited the prepaid insurance, excuse me, and credited cash. Now it becomes time to make the AJE. So what's going to be involved in this AJE? It's 12 months and so the insurance is expiring at the rate of $100 a month. So therefore, what's the insurance expense going to be on December 31st? That's expired. And this was April 1st.
1080.
What?
10,800.
All right, let's look at the example. You paid $1,200 for insurance on April 1st. How much of it's gone?
Oh, okay. Oh no, I was okay. Confused. $133 with 33 cents.
What's 1,200 divided by 12?
Oh.
100.
Thank you, 100. Thank you, Miss Kelly. So $100 a month is expiring. So we go from April to December. That's 9 months.
I was confused because I thought you meant like that 1,200 was gonna be divided by over the 9, not the whole 12.
No, you don't buy your insurance like that, do you?
No, I know. I just that was a little what's it called, brain fart.
Okay, so we debit prepaid insurance and credit cash on April 2017. It expires at the rate of $100 a month. And so 900 of it's gone. If I got any T accounts down here. So we put 1,200 in it. 900 expired. And so therefore, we had 300 left. Okay. Any questions? That's how the T account looks. And for let me get the insurance expense.
Can we do another example?
Are we getting ready to?
Okay.
So, and this is 2018. So you would have had 900 in the insurance expense. Okay. So since Christian wanted to do another one, let's look at another one. So 2018 rolls around and insurance goes up to $1,500. So I'm no longer paying $1,200, I'm paying $1,500. So what's my adjusting entry going to be for 2018? Another way of looking at this, suppose you had a cell phone that was $1,200, $100 a month in 2017. Then it went up to $1,500 in 2018. What would be the total amount of your insurance, your cell phone bill for 2018 only? If your contract started on April 1st, it expired on April 1st of 2018, then you had to buy a new policy for more. How much would you pay? As we get into the adjusting entry. So we're working another one, Christian, but we're up to the next year. Can you all handle it?
Yes.
So how much is the expense going to be? Well, let's make this entry here. And we said that the next year you had to pay $1,500. So what's your adjusting entry going to be now on December 31st?
Wouldn't it be 1125?
Well, maybe we will make this your rent.
Oh,
So let's make this your rent.
okay, let's do that.
Your rent goes from, your contract moves from $1,500 a month to $1,800 a month. So let's make it your rent.
Okay.
How much that landlord gonna want from you in 2018 without throwing your furniture out on the street? How much money is your landlord gonna want from you?
18?
So let's see how we would do that. So we bought the insurance. So in January, I'm on my old contract, 100. February, I'm still under my old contract, 100. And in March, I'm under my old contract, 100. But in April, what I got to pay? What might they want in April? If it's up $1,500. if you were paying rent, I guess most of y'all don't pay rent, and if your contract went from $1,200 to $1,500, how much does that landlord want on April 1st?
300.
300.
I'm gonna rent some stuff to you all. You paid them 100 in January, 100 in February, 100 in March. How much will you have to pay in April?
400.
400.
He's gonna put you in the street. How much does he want April 1st?
1,500.
You pay him monthly, unless you're paying your rent in advance for the whole year. So how much money does he want on April 1st?
100.
Now you in the street. Your stuff in the street.
125.
Thank you.
Oh my gosh. That's what it was.
So you gotta pay 125 in April, and then May to December, you gotta pay 125 all of those months. So how much is that gonna be then? If it's 3 months at 100 and 9 months at 125, can you all make that calculation for me? This will be on the 8 student quiz on Tuesday.
So we are having a quiz.
That's Tuesday. You said today.
Yeah. Like,
Well, you tell me how much you would have paid now. How much would you have paid in 2018?
1,000.
Hey, and you gonna still be in there paying the person $1,000?
No. Maybe not.
How much would you pay from January to December?
1,425.
Oh,
I tell you how you get 1,425.
I did the 100 for January through March, and then plus 125 for April through December.
There's somebody pay rent there.
That's true.
So when it change, you gotta pay more money. So that's what the adjusting entry would be like. Okay, let's see if we can. That was 7, 8. So let's do 9 and 10. So you're doing the same thing. So same accounts. Now these months and everything are going to change. But the accounts are staying the same. So if you're doing 9 and 10, make some calculations. Record the purchase of the insurance 2 times. And I think we said, I think it's July 1st and 9 and 8, isn't it? Yeah, July 1 and 9 and 10. So now we're July 1 in 2017. Then the December 31st. So now we're at July when you buy some more insurance. So see if you can calculate the amount that go in these journal entries. When we now at July 1st, I think this should be July 1st. So see if you got your screenshot now of this information. Basically, July 1st, 1,800. Then July 1st, the next year, 2,400. 1,800, 2,400. Make those journal entries. I finished?
Done.
So on July 1st of 2017, how much did we pay?
1,800.
How much?
1,800.
Okay, 1,800. So what's our adjusting entry going to be on December 31st? Monthly now.
600.
How many months is it? 6 months, right?
Yeah.
How much
It
you
should be
paying?
100. I think.
Now it's 1,800 divided by 12 is what?
Oh, hold on.
That 150?
150, yes.
So what's your total expense going to be?
900.
Is that what you had, Christian?
Yes, that's what I have.
Okay.
Finally.
Okay. So then we get to 2018. The 2017 policy expires. How much we paying now?
24,000.
2,400.
And let's look at our adjusting entry now. So in this adjusting entry now, we're going to have 6 times 150. But we're also going to have what? 6 times what?
200.
So 6 times 150 plus 6 times 200 equals what?
Uh, 2,000. Wait, no. Hold on. $2,100.
Thank you. So the insurance is expiring on the rent you're paying. 6 months at 150, then 6 at 200. Because these are 12-month policies. So we get the 150, divide 12 and 1,800, then we divide 12 and 2,400. Any questions?
So far so good.
So far, so good.
No, not at the moment.
Jacob says no, not at the moment. Let's go on to 13. We'll take care of 13. Then we'll be done for the day. So let me. So 13 says we purchased 5 autos for $20,000 each, paying $50,000 down. The autos are going to be depreciated over a full year useful life, using straight line, Chelsea. So we got 5 autos for $20,000, and we paying $50,000 down. So we make a journal entry, daring auto for what? $100,000. Credit cash for $50,000. Credit note payable for $50,000. So if you're noticing, the journal entries don't change, it's just the dollar amounts. So how much depreciation expense are we gonna have in year 1? So it costs $100,000. We're gonna depreciate them over a full year period.
For 10,000.
No. Our depreciation expense is gonna be, in this case, the cost 100,000 divided by the life, 4 years. Because we're saying they're depreciating at the rate of over a 4-year period. So 4 and 100, that 25,000 is the expense. And because we want to always know what the autos or long-term assets originally cost, we credit accumulated depreciation. Accumulated depreciation is a contra account. Okay. So at the end of the first year, the auto would be in at 100,000, and the accumulated depreciation would be 25,000.
So the net cost will be 75?
Left would be what, 75,000? Now, Chelsea, when we get ready to do the second year, it's kind of easy. And for the third year. Already got it calculated. Already got it calculated for the next year. So when we make this adjusting entry, not only if we're using straight line, are the accounts the same, but the amounts are the same. But the only thing is, at the end of 18, you depreciated at 50,000, so it's only worth 50. At the end of 3 years, you depreciated 75,000, so only worth 25,000. But once you calculate the expense, and we simply divide the cost by the life, 100,000 by 4, we got 25,000. Then in 2018 and 2019, in a simple example, it's going to stay the same. So if you get the first year right, you got the second one right. That's a good thing, right?
Yes.
Yes.
So you should realize that this is going to be an easy one on the quiz because it stays the same. The only thing that changes is, how much the car is worth. You just think about it. At the end of the first year, it's worth 75,000. At the end of the second year, that car worth 50, and it just keeps going down in value. But we credit accumulated depreciation because we always want to know what the car costs. Okay. So accumulated depreciation is a contra asset account. It has a credit balance. On the balance sheet, we subtract it from the cost to come up with the net cost. But we always gonna know what the cost is. Any questions?
No, sir.
Okay, so review all of these, and we'll have a mild quiz at the beginning of the period on Tuesday. A mild quiz at the beginning of the period on Tuesday. So we'll try to cover each type of adjusting entry. So there are 4 types. And I would try to see what I'll try to have this with a quiz. I may put it in Blackboard so you have it. Your chart of accounts adjusting entries, that's what it's called. So if you got the summary of adjusting entries, and if you got the chart of accounts for adjusting entries, you can go in there and put these journal entries in, which don't change. Then you just have to calculate the amount. So we'll see how we cover. We will see how we cover. Everybody get my study problems turned in?